Will the market retreat or consolidate from here? That's the question ahead of us in this current market. Gary Glover's been looking at the markets, the models, presidential cycle, and also where the best opportunities are to be trading right now. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
Looking at your this week's report that you do over the weekend and share on a Monday, if we're looking through the charts, what's popping out to you? Any changes for the US indices, or very much a repeat of what you've been saying the last few weeks and month or so?
Yeah, look, I still think we're seeing it. Well, we're seeing a few distribution days, Chris. We're seeing an increase in volatility. So you normally sort of, like when you're trending up pretty firmly, the trend's normally nice and tight. And then once you sort of start to get a bit more volatility there, that can be sort of, topping sort of price action there. So your greatest volatility is normally at your highs and your lows. When a trend is sort of running nice and firm here, then it should stay pretty tight here. So definitely we're seeing like 4 distribution days for the S&P 500 in the last 7, and we're also seeing an increase in volatility as well. It's definitely seeing some big moves up and down each day and stuff there. So it tells me we're probably going to be in, either some sort of retreat or some sort of consolidation mode here for the next, I guess, the next 3 to 6 weeks or something, I would say. So I think we'll sort of see a bit of a retreat there. I thought, it's interesting because you've seen the Dow come off quite a bit and the XJO, while the S&P and the Nasdaq have stayed pretty, relatively pretty strong. So definitely seeing a little bit of divergence amongst some of the different indices there as well. But I thought the Friday for the XJO was really telling, because we've had like a 300-point pullback on the XJO. So it's sort of come, I think it was, was it 7.9 back to 7.6 or something like that, so it's 300-point sort of drop there. But on that Friday, last Friday there, we had a bit of a bounce, and we had some pretty good volume actually come in there. So, which kind of conforms to this sort of neutral, sideways orientated view there. So, if you are going to sort of in a sort of larger sort of sideways or a corrective pattern, because you've seen that the volume's been a lot lighter over the last sort of 6 or 8 weeks there, where the market's up here, but been light, and then the market pulled back 300 points, and all of a sudden the buyers finally sort of step in. So anytime we've had a really deep pullback, we are seeing that buying volume sort of stepping in the market there. And so that's the sort of supportive of that sideways orientation. And we just, if you look at the sort of 70s and the 40s, those sort of high inflationary markets there, they did a larger sideways orientation there. Lots of short-term volatility, but really was sort of range-bound, you might say, for that period there. So while inflation's still sort of lingering around here, which tends to do, it might just sort of keep a check on markets there from really getting away too much. And we, like a lot of people think, if you got high inflation, then it's quite negative for markets there. And it's obviously inflation's not the best thing there, but we know historically, looking at those different asset classes there, that through high inflation periods you need to be long assets, because so asset values sort of keep moving higher here over time here. So the value shares, obviously energy, precious metals, they're the sort of top performers there, but generally sort of asset prices remain fairly buoyant there. So just, from an equities point of view, low inflation environment, you actually tend to get larger gains, but in the high inflation environment, you still get gains, but probably just not as strong. So, just kind of more, still supportive, but just not as supportive, I guess, is probably the best way to see it here. So, I just think at this stage, I think, kind of remain sort of neutral there. I think, so it was interesting just seeing that market pull back 300 points for the XJO and then bounce there. And we sort of said that saw the same thing with the Dow. Dow's had a pretty deep pullback as well, and all of a sudden that's had a bit of a bounce as well here. So, but I still think you'll see a bit of a corrective pattern here, and sort of, June, July at least, there sort of pull back into that range. That's sort of, we normally sort of see some sort of pullback into this timing here. And it's pretty interesting that the US indices have really followed the 60-year cycle almost identically so far. And that does sort of call for a little bit of an expansion, go to a margin new high, then a margin new low. So the Dow's almost really fulfilled that. So to me, the Dow looks like it's going to definitely come back and retest that low. Just whether it comes back any deeper, it maybe comes back to the old high there, around like 36.5, something like that. So, but yeah, just, so that's why you sort of can't get too bullish here or too bearish here. I think it's a bit neutral here for the next, sort of the next month or two there. But I do expect the markets to wind back a little bit, but you just sort of saw anytime the market gets sold off, reasonably aggressively, I think you're going to see buyers step in and buy. Still sort of plenty of money on the sidelines here. So yeah, it does sort of support that sort of kind of neutral view, you might say.
Okay, well, they're rather the indices, the overarching movement, which tells us not too much, but still opportunities within markets themselves, different sectors, different themes. PEX is one that you've been mentioning for some time. You've been able to identify a good move and trade a good movement within PXA. Looking at the weekly chart here, you're saying it looks encouraging so far. The bulls look to be in control. So is this one of those tight pullbacks that you're always looking for?
Yes. I mean, just as you and I, Chris, know that, when the market has had a bit of a pullback, and we want to be sort of trying to cast our eye over the stocks that have sort of held up the best, maybe sort of showed a bit of relative strength, because we sort of know those sort of stocks will sort of tend to kick on out of that sort of broader market pullback there. So stocks that sort of just show a little bit of relative strength there, tend to sort of kick on there. And you're seeing here with PEXA there with the last 3 weeks there that just really tight corrective price action there, pretty light volumes as well. So not a lot of aggressive selling going on there. So pretty impulsive out of the low as well. So a bit of a building. So this looks pretty robust there, really. So nothing negative at all so far. And just the 3 weeks here, pretty tight price action there, pretty, not much aggressive selling going on there while the rest of the market was getting sold off. Just bodes pretty well for the stock here. So just leaves that sort of stock in a pretty strong position there.
Okay, so a candidate for if the market does eventually rally, possibly in a couple of weeks or months, you'd want to be seeing it maintain, preferably above this high, just showing relative strength against the market.
Yeah, it would have been nice to have seen it retrace back to, maybe 14 or maybe even come back and sit on top of the old high there. But those 3 weeks are just remaining really tight in that range there. It's just not showing much weakness at all, Chris. So, and so the broader market's had a pretty decent pullback and this hasn't. So it's telling us that it doesn't want to go down too much here. So, yeah.
Well, if the market doesn't want to go down too much, or the share itself, it's always good to find more ones within that group or another one that's a possible candidate. Staying within the larger names, you've got Woodside in this week's report. That's showing up again. This is seems to be slowing down. We've had some steady fall from 31 towards 27, and while volatile, still hasn't really gained or lost much ground. How do you interpret that along this 50% retracement line?
Yeah, so obviously a little different from the PXA, there's relative strength there. I just, this one here, I just really wanted to sort of see, I think that $27 level is a big level for Woodside there. And considering, the sector's been fairly robust, energy in general, the stock's sort of been, kind of heading the wrong way here. But I didn't want to just buy it at 27 blindly. I really want to see the stock hold at 27, try and rally, then pull back and not go to a new low in the sort of same amount of time or less, which is sort of done now. So we've had a couple of bounces here now off 27. More importantly, I think on that Friday too, we just saw we saw a little bit of a strong bounce off that low and actually some, even stronger volume sort of coming in off that low as well. So we've had a couple of touches, a bit of a key level here, and the big volumes coming in as well. So pretty interesting. If you actually go back and look at Woodside, how it traded into the 2021 low, the last year almost looks identical, and even how it ends is almost identical as well. So not so that keeps sort of replicating here, but it's just very, very similar here. So, yeah, and then look, you're trying to make sense as to why Woodside is off so much, but when you do make a large position, sometimes it does take a little while to get that position down. So, it takes a while for the synergies to sort of come through, and you often sort of see this when a company does make a big acquisition. There just takes a little bit of time to sort of bed down there. So that this, I think if BHP had made a big successful bid for Anglo, I think you probably would have seen something price action like this follow. Because it would have taken a big acquisition there, the pressure on the balance sheet there, and then it takes a while to bring them together, synergies together. So it just causes a little bit of indecision in a time there. So you often get that sort of behaviour that happens. So that's why I think we're probably down here. Just still need to sort of prove itself a little bit there. It still hasn't sort of really broken above the swing high here yet, but I've just sort of added a parcel here, and just going to use that $27 level really as just under that as my stop here. So I think that's a good level here. It's shown a couple of touches here already. Just like what I was sort of seeing here as well. Now, having sort of looked at that high inflation environment there, energy number one, I think precious metals number two, and value shares number three, just feels like the right area to be in as well, Chris. So yeah.
Yeah, well, Woodside's definitely in the energy space. Woolworths, not so much, but you've got possible breakout after accumulation period. So this seems to be sort of more tightly held, congested retracement here. Are you concerned that it's come down under the low, and how it's behaved here, or how do you look at that?
Yeah, not so much there, just because it was sort of we've had a few few lower highs in there. Then we did expand to a new, we did break above that high. So oftentimes when you do expand to a new high, you come back and expand to a new low. So if you notice that, So see how that market went up to, went to a new high up in there. And then, so that's like a bit of a false break of the old high. So history tells us that can come back down to retest the low, which it did. So we've seen big volumes down here over the last couple of months. So that's kind of signs of accumulation possibly taking place. So I just wanted to see maybe a break out of that zone there. So seeing that sort of channel there tightened up, looks like it has sort of poked its head out here on the end of last week. There's some pretty good volumes coming in as well. So that Friday was just interesting price action there for a lot of stocks there in our market, having sort of sold off there. And just some of the names that were holding up, like Woolworths and Coles were a couple that were sort of showing a bit. So yeah, this looks sort of looks positive to me. It looks like we'll see a bit of a recovery from here. So I think the signs are sort of positive there.
Okay. Well, Coles, similar sort of space. Different chart though. So 1, 2, maybe 3, maybe 4. How's that looking in contrast or comparison to Woolworths?
Yeah, you got that little Livermore's accumulation cylinder, often referred to. But more importantly, there you get a few high lows or building there. In the last probably 4 or 5 weeks, we've seen price tighten up as well. So just like the volume here the last week or two here, just starting to tighten up here and show some strength there. So, really sort of strong. After that sort of tight price action there, just starting to poke its head out here. So I think, we break out here. I think this can move a bit high here. So, the sector's been under a little bit of pressure there just with all the price gouging allegations. So at some point they quieten down and they want to get back to business. And, pretty, as I'd like it, with that high inflation environment too, obviously maybe some of that discretionary spend can come under a little bit more pressure, but we're probably not going to stop eating or drinking, Chris. So those and gambling obviously is the other one that people do refer to as recession times. But I think that the staples there looks like a pretty safe place to be here. And just considering they have been beaten up here on the rhetoric, they do look. They just look like they're sort of building here quite nicely.
Okay, well, moving from the grocers into more technology side, Data 3, ticker DTL, the IT solutions company, still at the weekly chart.
Yeah.
What are we looking for? How do we understand what's going on here?
Yeah, look, I do prefer the stock holds above the old high, so which it did the first time, and then sort of did break below there marginally there, but it didn't spend too much time there below that old high. And then the last 2 weeks, I've seen some pretty decent volume come in at a bit of a key price zone as well. So that does sort of bode pretty well here for the stock here. So I think if it holds here this week, holds that level, I think that'll be a pretty solid sign for the stock here. And that's had a good run here. Had a bit of an impulsive sell off the top there, which is not ideal, but has come back to a big level there and sort of held there, and just that volume is sort of supportive itself. So yeah.
Okay. Well, IDX is the next one. So going from DTL to IDX.
Yeah. Interesting chart, actually.
Yeah, this one is. Yeah.
So they sort of run up into that high. We've had a bit of a pullback, come back and retest the high. And then the last 2 or 3 weeks is really interesting because it hasn't really sort of sold off much. And the volumes have really lightened up as well throughout that period. And I think this is sort of like a little bit of a cup and handle there. So I think TUA, NXL, UX have sort of made a similar sort of setup here in the last year. Just this sort of pretty tight sort of handle there, not really selling off too much yet. So, I think we're in a little bit of a downward channel at the moment here, but I think once we break, I think this can sort of break out here above this sort of minor highs there, and we see a little bit more volume come in there, then I think this looks all right here. Just still got a little bit of work to do here, but you can see that, and price action is, the volume's really light there throughout that whole handle as well. So that is kind of classic sort of setup here, but just does need to prove itself here still. Still needs to sort of probably break above 250 there and probably see a little bit of volume come in before we can get too excited here. But price action does look quite good there. I think the stock there, Integral Dynamics, has been sort of moving quite nicely too. Its growth has been pretty robust, been a pretty good performer in that sector there. So I know some people see it as a bit of a takeover target there, but never really don't rely on that rush ahead on that one. But yeah, company that has seen improvement in its earnings and revenue line is obviously a good thing to see here anyway.
Before we move, how do you view this whole channel from a relative performance perspective, given the market has been, it's been running a higher beta from this part of the move and this part of the move. So maybe the volatility has been more than the market, but relative to sort of this whole time period, if we take that into context, how do you interpret this from a relative strength perspective and a potential new leader when the market turns?
Yeah, so obviously off that sort of year high there, the market's had a pretty deep pullback over the last few weeks. So this really hasn't. And we saw a bit of selling come in as well from, quite a few stocks there, and quite a few stocks had a pretty deep pullback as well. So the index is 300 points there, that's 7.9. So roughly, what's that, around about 5% or something. So, this is held pretty tight here. Really, it's just kind of overlapping as well. So it's a bit of a corrective decline. So it's not sitting below each sort of step there. It's just really, really overlapping here. So, the thing about overlapping trends is what McLaren sort of said, is that they resolve themselves one or two ways. It'll either break down, come back and retest the high and then roll off, or they kick out, come back, sit on top of the high and then roll up, So we're going to see how this resolves from here. But I do like the fact that it's has shown a little bit of relative strength versus the overall market there, and just not really sort of sold down much, and just a lot of volume in there, Chris, as well. So it's had a chance to sell off here, and it really hasn't. So, probably not as strong as PXA, but still some good signs there anyway.
Nice. Well, as you're finishing out the report, you're looking at these different companies. When you're trying to identify the companies, is there anything different that you're doing in this kind of market, or are you still filtering the same kind of thing, relative strength, looking for behaviour down the bottom, basing patterns? Is that still your main go-to?
Yeah, look, I guess still sort of some of the portfolios, still looking for some of those maybe sort of deeper retracements there on some of the quality names there. particularly if the sort of PEs get compression and yields are interesting. So those are sort of good from a portfolio point of view. Probably more from a momentum sort of point of view. You're looking at those sort of stocks that are maybe that are still sort of holding the upward trend, still above the 50-day moving average, and just having a consolidation as well. So those are the sort of so yeah, just trying to mix it up a little bit with there. So some people obviously investors will have some defensive, some sort of safer sort of stocks looking for a bit of value in this market there, and it is. You can see that we do have a bit of a range. I guess we have been a bit of a range bound market for a while. So if you do see some of those, and that's the thing about the 40s and 70s too, is that as much as they sort of went sideways for the longer haul, or maybe sort of slightly upwards, they were volatile. So as much as they sort of stood still for a long period of time, volatility was pretty great. So I think if you're sort of seeing some really, A-grade companies have a pretty nasty sell-off, that there's an opportunity in there as well, just because of that does sort of suit the type of environment we're in. So doesn't sort of suit the momentum-based sort of trader there, but I know sort of like, even look at that, even Minabini, who is a momentum-based sort of trader there, when the market's a little choppy, you might not following through like this. He'll probably trade a bit smaller. So tighten up the stops and tighten up the targets there. So he might move, but maybe instead of a 3-for-1, he might move to a 2-to-1. But he won't risk sort of 7 or 8%. He'll probably risk 3 to 5% to make that sort of and have sort of smaller targets as well, just because you're not sort of getting the moves there. But I still think it's a bit, time to be a little wider here at the moment. Just we're not sort of seeing sort of follow through for a lot of stocks. Seeing a few stocks sort of sold a bit there. So definitely feels like there's opportunities there. Just you look amongst the different sectors, and not everything is running in tandem. Definitely a lot of stocks in the same sector are doing very different things, which is not that's not the norm. The norm is for all this similar sort of stocks to all sort of be running in unison, or you'll have your leaders and your laggards there for sure, but they'll if a sector's been running up and trending up for a year or so, then normally everything else in that sector's been doing the same. It's just the performances are all different. But we're definitely seeing lots of stocks in the same sectors going completely opposite directions, which is that's not what happens in normal markets. So so that's why we're going to adjust a little bit to the conditions as well. So, but that's all right. It sort of provides opportunities as well, Chris, as well. So,
that's really helpful insights to know how you're approaching the markets and what you're seeing as being different to the normal conditions and the favourable conditions that work for momentum traders. So, with those insights, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Playlists on the right. Gary's talked about setups and different research, such as the 40s and 70s inflation, as well as the 30-30 list, where Gary talks about the top momentum companies each week. Over on the left is his X, or his Twitter handle, if you want to follow Gary there.